Hey everybody, this is Scott Arnell, and welcome to this episode of the SRI 360 podcast, where in every episode I interview world-class, sustainable, and responsible investors, executives, or entrepreneurs who are driving positive change in the world while achieving market returns. And I do this in order to bring you the lessons that they've learned along the way from their investment activities and their experiences, and to find out what they are actually doing and how they are doing it so that you can have better insights into the different SRI investing strategies that are actually being done today and what they're actually doing right now, and doing it across many different asset classes. And hopefully this will help you invest in a more purposeful way and to invest for positive impact for a better world through your investment activities. Today, I'm speaking with Ron Gonen, and that's spelled Gonen. And Ron is the founder and chief executive officer of Closed Loop Partners, which is a New York-based investment firm comprised of venture capital, growth equity, private equity, project-based finance, and an innovation center that's focused on building the circular. Prior to Closed Loop Partners, he was New York City's Deputy Commissioner of Sanitation, Recycling, and Sustainability during the Bloomberg Administration. Ron oversaw public policy in that regard and the collection and processing of New York City's paper, metal, glass, plastic, textile waste, electronic waste, organics, and hazardous waste. And in 2013, the Natural Resources Defense Council and Earth Day New York named him the city's Public Official of the Year. Throughout his career, Ron has earned numerous business and environmental awards, including recognition as Champion of the Earth by the United Nations Environment Program. He was awarded a Medal of Excellence by Columbia University, where he earned his MBA, and later he served as an adjunct professor in his business school from 2010 to 2018. He was also the 2021 recipient of the Social Enterprise Center Award for Excellence in Teaching. Earlier in his career, Ron was the co-founder and CEO of RecycleBank. Ron was a former member of the Council on Foreign Relations and the Henry Catto Fellow at the Aspen Institute, and he holds multiple recycling industry technology and business method patents. We will be having a far-reaching conversation today where we discuss Ron's early career at Andersen Consulting and a follow-on consulting stint at Deloitte. Then we'll talk a bit about how, while he was earning his MBA at Columbia, he co-founded RecycleBank, where he was CEO until 2010. Then we'll speak about how he became the Deputy Commissioner of Sanitation for the Bloomberg Administration at New York City, where he was responsible for recycling and sustainability, and how after the Bloomberg administration came to an end, he founded Closed Loop Partners, where he focused the company on building out the circular economy. Ron clearly describes exactly what the circular economy is. He talks about why he believes the circular economy is a clear financial competitive advantage. We talk about Closed Loop's investment strategy and Ron's investment process. He talks through a couple of examples of circular economy investments that he's made. We speak about how he verifies impact and measures outcomes. And then Ron speaks about his innovation center, how that all came about, what it does, and how it's a strategic competitive advantage for his funds. Ron is definitely someone who's in the flow and in the forefront of the thinking on the subject of the circular economy. So if you're interested in the circular economy, today is your day. You can find Ron on LinkedIn and on the internet at closedlooppartners.com. I really learned a lot from my conversation with Ron, and I think you will enjoy it. And now, please meet Ron Gonen. Is that true? You're from Philadelphia area?
Yeah. So I spent the first part of my life in Israel and then moved to Philadelphia.
Were you born in Israel, or?
I was born here, but went there as a baby. My parents divorced, and my mom was American, and so I came to the States when I was about 5. And mostly grew up in Philadelphia, and would go back to Israel in the summers. And then went to the University of Massachusetts for undergrad. Where I studied history and economics and played water polo. That was my sport growing up.
I can see that.
And then from college, went on to start my career at what was at the time Andersen Consulting, now Accenture. Yeah. And then went to Deloitte.
So what was your idea to go into consulting? What attracted you to that?
I graduated college in 97, and the first technology boom and really the early phase of the dot-com boom was starting. And I was someone who was coming out of college with a background in history and economics, and there was all this advancements in technology going on. And I was either going down the path of getting a PhD in history or a PhD in economics or doing something different. And that was really the path I thought I'd go down. And the person I was dating at the time was a little bit older, and she was already at Andersen Consulting, and said, you'd be really good at business. And I said, I don't know. I want to go get my PhD in history or economics. She said, no, you'd be really good at business. And so I said, okay, well, what do you think I should do? She said, well, you should interview at Andersen Consulting and at Goldman Sachs. And so I interviewed at both places, and I decided to go to Andersen because I felt like this would be a great platform for me to learn about software and technology and what was going on. And there were some opportunities to go into the .com world, but I just felt like these people my age that are going to the .com world and taking on these senior roles and making decisions, like maybe they know more than me, but they can't know that much more than me.
Yeah, no much.
I had life experiences and started working, jobs when I was 13 and, did well in college and got a couple of degrees. And like, they can't be that much smarter than me, but they got these kind of fancy titles and making all kinds of decisions. I just felt like something's just not right with that path. I'd rather just go to a place like Andersen Consulting and just get trained and learn. That's what I did. And that was a great experience to really get that training early in my 20s and then went on to Deloitte and had another good experience, and then decided I'd gotten what I wanted out of that experience and stage in my life and went back to business school.
So then you came out, and if my research is right, you co-founded RecycleBank?
Yep.
Correct. And what was that about?
So when I just started my MBA, a friend of mine from high school asked me to come over for dinner and say, like, hey, I have this idea that if you could reward people for recycling, you could probably motivate them to change their behavior. And I said, well, that's a pretty good idea. I think I could build a software and system to do that. And that's really where the training I got at Andersen was so important, is I could now take some of my idealism, a good idea, and actually be the one that built the software to drive the solution. And so we co-founded RecycleBank together, and I became the CEO and built that company. I was the CEO there from 2003 to 2010.
During your consulting gigs, was there an area of focus that you were assigned to, or were you all over things?
I was in the CRM group doing implementations of a software system called Siebel Systems.
And why did you leave RecycleBank eventually?
Some of my venture capital backers started having differences with my outlook on the trajectory of the business. We were in a unique position where this was 2008, 2009, where a lot of venture portfolios were collapsing, and we were actually doing really well. Been named as the #1 venture-backed clean tech company in the world by Wall Street Journal for 2 years in a row, and we're continuing to grow. But we weren't your typical Silicon Valley company where you sprinkle internet dust on it and spin a story and take it public before the catches on to the fact that you got a lot of revenues because you're just buying customers, but there is no plan for profit. We were a little bit of a different type of company where we actually had contracts with municipalities and actually had to deliver a distinct value and make sure the recyclables were getting to the right place. And so they sort of wanted us to IPO, run faster. And I was sort of pushing back on, we're doing really well as a company. We have to be very conscious that we grow in a way that's stable and sustainable. As a CEO in my early 30s, battling venture capitalists in their 40s, 50s, and 60s with billions of dollars behind them, I thought I could win the battle, but
not the war.
It's time for me to move on. But I'd learned a tremendous amount. It was an awesome opportunity to be able to build a company as a young CEO in my late 20s and into my mid 30s. So that was an awesome opportunity. I learned a lot from that experience in terms of just integrity and who you work with. I had a modest financial exit as well, which helped give me flexibility for what I wanted to do next in life.
And I think the next main thing you landed in was working in the Bloomberg Administration. But I think in between you became an adjunct professor, but founded something else at the same time. Is that correct?
I was really struggling after RecycleBank to kind of think through what could I do that would have equal or greater impact. I was feeling very unfulfilled and left with this feeling of I was doing what I was really passionate about, and then it got pulled out from under me, and very stable in terms of where I stand and what I'm going to do next. How I'm going to find something like that. But I had some things to fill my time. Columbia asked me to come back and be an adjunct professor. I got a fellowship at the Aspen Institute, so I had that to focus on. And then I got a call from the Bloomberg Administration where they invited me to come and join the administration.
And there you were the Deputy Commissioner of Sanitation, Recycling, and Sustainability. Was that a new role that they established? Was it?
A new role that was created for me to come in. And basically, I split management of the sanitation department where the existing commissioner kept garbage and snow removal, and I took over everything else, including all the recycling, organics, electronics, apparel, hazardous waste.
And how'd that come about that they asked you to join?
I always describe myself as the compromise candidate, where Bloomberg really wanted the sanitation department fixed and modernized. And he knew that if he brought in somebody that was too left and too progressive and just wanted to use the sanitation department to save the world, the old school sanitation guys, the garbage guys, so to speak, would push back. They would blanch at that and say, this person doesn't understand trucks. They don't understand hydraulics. They don't understand transfer stations, logistics. This is a joke. And they're talking about all these things without having any idea how to implement or what happens if we miss a collection. The environmental community that was really pushing Bloomberg to modernize the agency would not have accepted sort of old school sanitation guy coming in. And so I always joked that I was sort of compromise candidate where I've got these sort of progressive chops with the environmental community because it's something that I feel very deeply about. But I'd also built my own recycling company where I picked up recycling, I picked up garbage, I had patent hydraulics on trucks. And so I was sort of this known and acceptable and respected entity amongst all the cast of characters that were all either pushing for change or trying to resist change. And so I think that's why they ultimately came to me to see if I would do it.
And it seems like in 2013, Earth Day New York named you as the public official of the year in New York City. Is that true? That's something for your gravestone. Yeah.
That is true. Yeah.
Not everyone gets that. When Bloomberg administration was coming to the end, you probably had to find something else to do. So then you founded Closed Loop closely after that, or right after that. How did that come about?
I founded Closed Loop Partners. I had this idea for a long time that the way you end up capitalizing and building this infrastructure is by getting the interested parties all aligned, which are the consumer goods companies and the retailers. And I had been working with all these companies since I founded RecycleBank. Coca-Cola was an original investor in RecycleBank. They were all partners in the incentive program that we had. And so being able to go to them where I had had that experience of working with them for many years and they knew me as a known and trusted entity, we were able to come up with a structure where they ended up becoming my first investors. You solely co-founded it yourself? Yeah. I just wanted to mention here for anyone who's eventually listening to this that you were been recognized on a number of occasions, but you had recognition as champion of the earth by the UN environmental program, which I think is the highest distinction for environmental protection that they give. So I want to point that out because as we get into the discussion of environment and recycling, you're someone who's in the flow and the forefront of the thinking on these subjects. What was the genesis of your personal journey into environmental sustainable investing? I've always had a passion for the intersection between social policy and the environment. This is just the most effective mechanism for me to operate within today is as an investor. But my passion isn't necessarily to be an investor. My passion is to be at the vanguard of that intersection between social policy and the environment. And it just so happens that where I find myself to be able to be most effective today is in that role as an investor. Right. Because you didn't start out with the idea to be in finance originally. No, but I've always viewed finance as one of the most effective tools. And actually, one of the people that has had the most impact on my career and thinking has been George Soros, where in college, I was talking about all these concepts around sustainability and aligning business interest with sustainability. And people told me I was being too idealistic and it had nothing to do with business and I would never be able to make any money at it. And then I read this article by George Soros in The Atlantic when I was a senior in college or junior in college. And it was a really important article for me to read because I kind of heard of this guy, George Soros, but didn't really know much about him. The article he wrote sounded a lot like what I was trying to write about and talk to people about, just in a much more eloquent and thoughtful and experienced way. I thought to myself, wow, this seems totally aligned with what this person's writing. I wonder if people think that he's too idealistic and will never make money at this. And I started reading about George Soros and realized, wait a second, this guy's made more money combined than all of the naysayers that I've met. So maybe I am onto something. Interesting. So that was a pivot point for you. And as I've been preparing for our discussion, I've got to tell you, I've been grappling with this because it seems to me you're doing a lot of things compared to most funds that I talk to. I mean, you're a VC,
You're also investing in private equity, and then you've got a growth equity fund, and you do project-based finance, and then you've got an innovation center. Maybe you could just start out with a high-level overview of Closed Loop Partners and what you're doing, what your mission is, maybe at the 10,000 meter level right now, just to frame it.
Closed Loop Partners is an investment firm and innovation center focused on the circular economy. We're structured to be able to invest anywhere along the growth trajectory of a solution. We can look at bottlenecks in supply chains, identify solutions, identify the right type of capital for that solution, and then focus on solving that bottleneck. And we try to do it in industry verticals where we have deep expertise or our corporate LPs are prominent. So consumer products and packaging, food and ag, fashion apparel, and electronics.
Do you have separate funds?
Yes, we have separate funds. We have a venture fund, project finance fund, a growth equity fund, and a PE fund.
And are these open-ended or are they closed-ended?
They're closed-ended.
And do you disclose your AUM?
We don't disclose our AUM, but it's in the hundreds of millions.
And is it mostly U.S.?
Mostly U.S., but we have a major focus in Israel and an operating partner in Israel, some investments in Europe, and one investment in Latin America.
So is it 4 separate funds, or do you have...
There are 4 separate asset classes that we manage. We have 7 funds that we manage because some of the asset classes have more than one vintage at this point. Do
you have certain benchmarks that you target for each of these classes? Or
we're either targeting for net 15% or net 20% IRR.
Do you consider yourself to be more VC or more PE, or is one more stronger in your wheelhouse than the other?
No, that gets back to my comment around, I don't necessarily view myself as an investor, quote unquote, building the circular economy. And that means that I'm using an investment platform to build out the circular economy. And I find all of those asset classes to be interesting.
Did you start with one?
Our first fund was a credit/infrastructure fund.
You said you're exclusively focused on the circular economy. How do you describe the circular economy, and how would it differ from the linear economy?
Linear economy is structured where extractive resources, oil and gas, mining, and the landfill industries dominate in terms of value creation. In order to manufacture anything, you need to extract a natural resource. It's usually designed to be used once and then disposed of in landfill. And then the next unit you manufacture, you have to extract natural resource again. You have to then dispose in landfill. And that type of system, while it's in the best financial interest of the extractive industries and the landfills, it's not in the interest of taxpayers, consumers, consumer products companies, or municipalities. What's in their interest is a circular economy where you're constantly reusing material in a sustainable loop.
Your funds are exclusively focused on the circular economy. And so my question is, how do your funds represent an attractive or more attractive investment opportunity versus, let's say, a traditional VC fund or PE fund, or even one that's ostensibly environmentally focused VC or PE fund?
Because we believe that we're investing in where the market and the economy is moving, and that we have proprietary insights in terms of that direction because of our corporate LP base. And so why invest in us? Because you're going to have the best returns in the market in investing in our funds, along with feeling like you're investing in products and services that are beneficial to your community and the world. That's very, very important to me, that people begin to recognize that investing in either a circular economy or in sustainable products, returns will be far better than the alternative.
So in the end, you believe it comes out in the wash with the financial returns? I mean, it's a clear financial competitive advantage?
I'll give you an example. And this is a cognitive dissonance that exists in the financial services industry. People like to say it goes back to Milton Friedman, but I think it goes back before then, where it's believed that the sole job of someone in the financial services sector or an industry is to just make as much money as possible without any other consideration. So let's take that notion and put it through a investment strategy. If I started a fund in 2000 and I said, I don't care, I'm investing in the greediest, the most capitalist, the most boisterous CEOs and companies out there who just take pride in just being aggressive and grabbing as much as they possibly can. And over here, I've got another fund that it's really focused on aligning itself with companies and CEOs that believe that they operate within a community of stakeholders and have to build value for everyone. Let's look at those two funds. What I would probably have in the first fund, or at least would never have screened out, would be Enron, WorldCom, HealthSouth, Tyco, and a bunch of mortgage-backed securities. And I'd probably still be holding a lot of fossil fuel stocks, which are now tanking. On the other hand, this other fund that was focused on ensuring that there was value for all stakeholders and how I operate would have companies like a Unilever, where Paul Pullman made sustainability and circularity a key of his management style at Unilever and far exceeded the returns of his competitors. You'd have companies in there like SodaStream that Pepsi acquired for $3.4 billion, companies like Seventh Generation in there, Method Cleaning Products, so on and so forth. So it's been my view, and I think the data backs this up, that not only are you going to end up investing in companies that outperform the market, equally or more importantly, you're going to screen for companies that are either long-term going to lose significant value because of something that they're doing that they're not exposing the market to, something that they're trying to hide, or because they just don't recognize where the world is going and are planned for it.
Eventually, it's going to come out in the wash. I mean, there's going to be companies that don't adapt to this are not going to perform financially as well.
Yeah.
There's people that still have a hard time getting their head wrapped around that, or at least the data isn't always clear cut.
I have chief investment officers today of endowments that go, I feel really good about myself because I've now decided to get out of fossil fuels. And they want to be patted on the back. And I go, well, there were papers that came out a decade ago talking about how fossil fuel assets were stranded assets and you should get out of them now. And Jeremy Grantham, who's been one of the most successful investors for the last 75 years, has been saying that for 15 years. And so I tell these chief investment officers, well, before I pat you on the back, let me ask you something. Has anyone done an analysis of 10 years ago when people started talking about these fossil fuel assets or stranded assets? Has anyone looked at if you would have made the change then and moved into renewables versus staying in fossil fuels? Yeah. What would your fund performance be? Like maybe we shouldn't be patting you on the back. Maybe we should be pushing you out the door. Maybe you got to this just way too late. And so I think we have a problem in the financial services industry where there's way more urban legends and myths and cognitive dissonance than is healthy for the long-term value that shareholders expect.
You said you ended up focusing on 4 key sectors. I think it was plastics and packaging, fashion, technology, and food and agriculture. How did you end up focusing on those as the place where you can maximize your impact as an investment firm?
It had to do with the professional experience of my team. People ask us sometimes, why don't you do the built environment or why don't you do medical waste? And literally a lot of it has to do with just, along with successful fund managers, we're mostly former CEOs, CFOs, heads of municipal agencies. And so we try to invest in things that we know.
So let's talk about closed loops investment strategy and your investment process. Could you maybe describe logistically and tactically or operationally, how do you identify your targets and then get down to actually selecting an investment and make your investment decisions, what screening processes you use, both financial and non-financial?
So I'm a big believer in value investing. So we try to ensure that each one of our funds is a very strict price to value discipline, as opposed to just like, hey, this is a cool company. Let's try to evaluate if the valuation is correct. We try to say within this asset class, this is our price to value ratio that we're comfortable with to make an investment. And so sometimes we see investments where we really like the companies or we really like the CEO, but just doesn't fit our price to value discipline. So that's the first thing, is we're always looking for, does it fit within our investing model? And that doesn't mean that we don't miss investments sometimes, but what it does mean is that we optimize our time and our focus and our expertise on specific market segments and sizes within those markets.
So that's the initial screen, but then you have non-financial screens as well?
We have non-financial screens that involve how circular is the company? What kind of impact is it having? How many tons is it ensuring don't go to landfill? How many tons of GHG emissions are they reducing? So we definitely screen for the social and environmental impact of the company, not in an esoteric way.
Yeah, I think in your 2020 report mentioned that since 2017, your venture team has seen something like a pipeline of over 2,500 opportunities, but funded 19. Those are not great odds.
Now we're closer to 30, but yeah.
And so now I presume all of these were circular economy companies, or I imagine you wouldn't have wasted,
something about it to do with circular.
So what are the funding prospects out there for, the companies you didn't invest in? Is that because you determined they weren't good, really circular economy companies, or are there other sources of finance for them?
On the venture fund side, probably the biggest screen is that we'll only invest in a company where the post-money valuation is below 10 million when we invest.
Yeah.
So that's probably the biggest screen, is just the interesting company. It just doesn't meet our investment model and price to value ratio that we need. So that's probably the biggest screen. Then the next screen is generally, is this a technology that can be advanced to the stage where it's a business? So we're always asking the question, what problem is this solving for somebody that would pay to have the problem solved? Because there's businesses or governments that have problems, or just they're not motivated for whatever reason to fix that problem. So you got to make sure that the solution is a good enough of a solution that the buyer, whether it be a business or a family or an individual or a government, says, wow, that really solves a problem for me. So that's the next screen that we're looking for, is that transition from cool technology to legitimate business. And then you start screening for the entrepreneur or the CEO and other factors. But those first two will weed out a lot of that 2,500.
Could you give me, one or two examples of an investment that is the type of investment that is a circular economy investment that you selected, is very representative of what you look for?
Sure. We were the seed investor in a company called Home Biogas, which is a company based in Israel, which has since gone public on the Tel Aviv Stock Exchange. And that's a company that has developed household-size anaerobic digesters. It's an appliance that goes into your home or your backyard. You put food waste into it, converts it to gas that you can use to heat your water or to cook on.
Now, how did they come through your funnel?
It was a solution that I had been looking for and actually been writing about. In a parallel universe, the founders and CEO were developing it. And as luck would have it, we got connected and we became their first investor, and they've done a great job.
That's interesting. Do you have one more example, perhaps?
Sure. Cool company on the early stage. There's a company called Mori, Mori, which came out of MIT. And it's developed a odorless, tasteless, edible silk protein that goes around fruits, vegetables, meat. You can't see it, can't smell it. You could digest it if you wanted to. It eventually evaporates into the atmosphere, but while it's on there, it's creating an oxidization barrier to reduce spoilage. And so it's a perfect example of using material science to get rid of all the plastic packaging involved in supply chains and storage of foods.
And your exits, are you primarily going to corporate LP buyouts, or is it completely third party? Do you have corporate investors or not?
Yeah, we have corporate investors. That's a possibility. To date, the exits we've had have just been traditional buyers who have gone after it.
Now I'd like to shift a little bit to discussing impact. And in my research, I've read that Closed Loop has very impressive impact outputs. I've found where you have said that you diverted 2.3 million tons from landfills. And landfills are the third largest source of methane emissions. And you've avoided 5.3 million tons of greenhouse gas emissions and created an additional 16 million in economic benefits to municipalities and local communities by avoiding landfill tipping. So my question is, how do you verify impact, and what does it mean to you, and how do you measure it?
That's a good question. So what we're looking for in terms of impact is the ability to reduce extraction of natural resources and disposal in landfills. So any investment we look at, whether it's an anaerobic digester or material science company or recycling facility, we're always looking at it through the lens of, is this investment going to reduce the need for natural resource extraction or disposal in landfills? That's what we look for in terms of how we want to have impact. number one. In terms of how we measure it, we have certain criteria that we ask our portfolios to report on in the areas in which we think they're having impact, whether it be how much recycled material did you use so that we can measure that those are natural resources then that weren't extracted, or how much of your product was recycled, or if you're a recycling company, how much are you recycling, which represents material that could have gone to landfill, but instead went back to the supply chain. In our financing documents for the company, they're required as part of the investment to report on their numbers.
And is the reporting straightforward?
Generally pretty straightforward because it's things that we work through when we put the investment together. So it's not like we're coming to the company and saying, do you think XYZ? It's as part of the diligence process, we said, are you going to be able to report on the following, and are you comfortable doing so? And could you show us how you would do that? There's lots of companies that can't, and we don't end up investing. So by the time we've made an investment, we feel pretty good that there's a very concrete understanding about structure.
As soon as you have a report card of some sort, then there's going to be some actors out there that will game the system, of course.
Yeah, it's a challenge, but that's what we're looking for in our diligence process. And look, there's no shortage of companies looking to raise money by greenwashing, and no shortage of funds that are looking to raise capital and just greenwash and put the capital to work. So we try to let those guys find each other and do their thing. And
could you give me some examples on how you do measure it, though? Maybe they're not all similar, but could you just give me one example?
So if you take a recycling company, we're having them report on all of the tons that they're processing by material type: paper, metal, glass, aluminum.
Mm-hmm. That's in, and then you measure what's out.
Yeah. Well, we measure what comes in, we measure what comes out. We also measure how much more were you able to process post our investment.
And are most of your investments involved in recycling?
A lot of them are, but we're really focused on supply chains, and recycling is a big influencer in supply chain management, but just a piece of it.
Who are your fund's typical investors? And I guess that depends which fund we're probably talking about.
Yeah.
And why do they invest with closed loop? Is it out of passion, or is it because of the returns, or is it both, or maybe it doesn't matter?
We have a lot of corporate investors, and they're mostly interested in us building out supply chain solutions for them. So they obviously look at their returns, but what they're most interested in is making sure that our investments are creating supply chain solutions for them, because those supply chain solutions are ultimately going to make them more money than our returns, which are very healthy. We return in the upper teens and 20% returns. So that's what they look for.
Right.
I would say the other investors we have are family offices, financial institutions, and foundations. I think they have a combination of, they want strong financial returns and to make sure that their money is invested in something that's creating some type of benefit and no harm.
I'm interested in the corporate investors you have. When you say they're interested in supply chain solutions, is that essentially like you're innovating their pipeline?
Sometimes we're developing innovative new solutions. Sometimes we're just getting solutions to scale. So we invest in a company called Our Planet Earth, a bottle-to-bottle recycling facility in California. It was $150 million financing with Oaktree and Citi and the state of California and us. Our corporate LPs really care about that facility getting built because they want that material. They're just not in the business of financing manufacturing facilities. And so it doesn't get built if someone else doesn't step in. And so they look to us to help with that.
Have you had any exits to any of your LPs?
Exits to our LPs? No. We've had exits, but not directly to our LPs.
All investors are exposed to similar risks in terms of market and so forth. Are your investors exposed to any risks that you would describe as being unique to investing in the circular economy versus, let's say, a traditional PE or VC?
Well, what makes what we're doing unique is that we have the brands giving us proprietary insights in terms of where the market's going. So our thesis might be idealistic and aspirational in that we want our investments to do better for the world. But on the same token, maybe we're not idealistic or aspirational. Maybe we're just realistic about where the world is headed, because our corporate LPs, who are the largest CPG companies, are telling us where they're trying to go, and we're trying to put money behind that direction.
How does that translate to risk?
There's risk inherent in any investment. There's risk in the person you're backing. There's risk in the market. There's risk in the product. But I think investing in the circular economy, at least today, is a way of actually de-risking your investment because you're investing in the direction of where major industry is going.
I wanted to change the subject a little bit, discuss the genesis of your innovation center. Maybe you can explain a bit, what is it and how did that come about? And is that like a R&D for you, or is it a cost center? Is it a profit center?
So pretty early on in the formation of our company, our corporate started asking us for advice and recommendations and suggestions on different challenges they were having. And so we started offering this advice and different suggestions. It started growing and growing. And so I recognized that, hey, we have a business here. We could be offering advisory services and research and development. And that really became the seed for the Center for the Circular Economy. And then I got somebody that I worked with very closely in the Bloomberg Administration to join me to lead that, which helped significantly, Kate Daly. And then since the business had kind of an ongoing platform to jump into, because of the work the firm had been doing, it's been able to take off and do really well.
So it's a separate profit center by itself then?
Yeah, definitely. Separate profit center that's done very well for us.
Is it turned into it being synergistic as a competitive advantage for you?
Definitely.
I mean, can you
have
give
a group internally that's thinking about where things are going and what's happening without the pressure of, am I investing, am I not investing? They're just evaluating it from a pure industry analysis scenario.
And these initiatives are funded then by third parties outside?
Yes.
And then have any of these developed into something that you ended up funding and seeding through the VC to your VC arm?
I think it's definitely given us data and insights that's led to investments. The center's been very helpful to us because you have this internal group that's working on bottlenecks where there aren't investment grade solutions yet. If there was an investment grade solution, our asset management team would be investing in it. But it's a bottleneck that the brands have told us about, and we haven't been able to find an investment grade solution. So now the center works on, why isn't there a solution? What's required for there to be a solution? Is there a solution, but just needs a little tweaking? So having that type of innovation and insight group within an investment firm is really helpful because it tells us where some of the biggest opportunities are, as well as some of the challenges.
You say the recycling landscape in North America is fragmented. I live in Europe most of the time. Could you explain what that means, that it's fragmented, and how does it compare to what you know to be true in Europe?
It's not that dissimilar, actually, from Europe in the sense of, if you look at Northern Europe, you've got really good recycling infrastructure. Yeah, if you start going down to Portugal, Greece, southern part of Italy, better than in the US, but not that good. And so what you find in the US is that in major metropolitan areas, you have good recycling coverage. And there's also plenty of places where there isn't good coverage. And so it's very difficult for brands to come up with a national strategy in the US because there's no national partner for them to partner with that can service them everywhere.
What would be the solution for that?
Scaling up a regional or national circular economy company, which is something that we're very focused on doing here, actually.
That, though, being private as opposed to public?
Private to start off, but I could see it eventually being public.
I spoke a little while ago with Jed Emerson, and he described how he feels that we as a society have done a pretty poor job at pricing in ecosystem services into the economy, and that many companies are offloading their environmental costs onto the public. Companies that are viewed as being very profitable are less profitable because they're effectively paying this ecosystem rent at artificially low levels. To what extent has that happened? How big of an issue is that? And what could be done to correct that?
It's a really, really big issue. Just to give you an example, the fossil fuel industry, which is the maker of plastics, receives $20 billion a year in local and federal subsidies. And so when you're giving an industry that much money, it can artificially keep its prices low and make sure there are not alternatives at scale. And if the U.S. took the money it gave in tax subsidies and other subsidies to dirty industries and shifted that over to sustainable and circular industries, you'd see a tremendous growth over the next 5 years. They could say, we're just going to spend $100 billion on sustainable solutions and renewable energy and circular economy. $100 billion over the next 5 years doesn't cost taxpayers a cent. All we're doing is shifting that money from petrol over to another industry.
What about changing the way these companies account for these costs? Or will the market effectively just drive them out anyway, or drive them towards circular?
It'll drive some towards circular, some will fail. But the bigger problem is a lot of these industries have only been profitable because they've been getting subsidized by the public.
So if you're saying if we get wiped out those subsidies, things would change almost immediately or redirect.
Absolutely. Like one of the great scams in American history is that the CEOs of ExxonMobil got to make a lot of money and sort of pound their chests as the titans of capital. But in reality, behind the scenes, they were really on the dole. They were collecting government subsidies for their businesses. And I think getting rid of those types of subsidies or making sure everyone has it would go a really long way in terms of evening out the market.
You're committed 100% to the circular economy. Are you up against powerful forces who have vested interests in the traditional economy and are actively lobbying against the circular economy?
There's definitely some opposition. I wouldn't necessarily describe it as they used to be winning, but I think the tide has turned and now they're fighting an uphill battle. But there is definitely opposition from the extractive industries and the landfill industries. Those are the two industries that don't want to see this change happen.
But are they actively applying resources? All your AUM is focused on moving this forward. Are they applying AUM against that? And is this David and Goliath, or what is it?
Good question. I wouldn't think that they're applying it against us. Some cases they are. In most cases, they're just trying to keep growing the legacy footprint that they have. And so in that sense, like we compete, we butt heads, but not because they're trying to do what we're trying to do or we're trying to do what they're trying to do. It's that we're both going after the same pie. And right now, they have the largest piece of the pie by far. And so every time we just take a small nibble out of it, it starts to bother them a little bit.
But it's more like a bite from a bug.
The bite's getting much bigger now because now it's the government that's biting and doing that.
Earlier this year, you released a book, Waste-Free World, How the Circular Economy Will Take Less, Make More, and Save the Planet. So you're a proper author, not just someone like me interviewing people. And you had some nice things said about you by a wide range of people like Michael Bloomberg. But can you tell me a bit what it's about and what was the impetus that motivated you to write that?
Well, the impetus was something that I'd wanted to write a book for a really long time. And just the right situation came along where I got an offer to do so. So that's really what prompted and led the book. But these are ideas that I've been thinking about for a long time and wanting to publish. The book is a fun and interesting way, a chronicle of modern U.S. economy and manufacturing and production, and how there were certain decisions made in the best interest of certain industries, like extractive industries, that were not to the benefit of the public, but it's the public that ended up having to pay.
So it's more historical.
So it's part historical, and then I get into the future of the circular economy and all the opportunities.
And it's all in a fun way.
I try to make it an enjoyable, interesting read.
I guess really quickly, the Reusies, okay, this is your award show that you're doing. I think it's coming up here pretty quick, isn't it?
Yep.
So here's a plug for it. Go ahead.
So the Reuse is a contest looking at all the different types of reuse programs out there and trying to recognize and award some of the winners. So we're excited to be very engaged in the reuse space. So.
And where can people watch this?
Going to our website, closedlooppartners.com, and they'll find out more information about it.
All right. And I did not ask you about your book. I suppose people can buy it on Amazon or wherever books are sold. Okay.
Wherever books are sold. Let me know what they think.
Well, I'm definitely going to move it on top of Stephen King's Billy Summers, which is on my night table. This is going to move up to
This
the
is
top.
better. This is better.
Yeah. Well, you told me it's entertaining. Then I know you have to jump. I really appreciate you taking the time to contribute to the project. But thanks very much for taking the time, and we'll be in touch. All right.
Thank you.
If you enjoyed this podcast, please do me a favor and hit the like button and subscribe to receive future episodes. You can find more interviews, articles, and information on sustainable and responsible investing at our website, sri360.com. If you enjoyed this interview and you would like to read more lessons learned from world-class SRI investors, get yourself a copy of my book, Sustainable and Responsible Investing 360 Degrees. It's a must-read for anyone wanting to know more about investing for positive social, environmental, and ethical impact, all with market returns. These are the stories and tactics of those leading the way as sustainable and responsible investing goes mainstream. Sustainable and Responsible Investing 360 Degrees is now available in hardcover, ebook, and audiobook format wherever books are sold.